So friends, let me take question number 6 to 10 on financial management for government exam preparation. Question number 6 is, what will be EBIT at financial break-even point if interest cost is rupees 10,000, dividend is rupees 9,000 and tax rate is 10%. चार ऑप्शन दिए हुए हैं 15,000, 20,000, 19,000 और 11,000. तो फाइनेंशियल ब्रेक इवन पॉइंट क्या होता है? फाइनेंशियल ब्रेक इवन इज द पॉइंट वेयर योर प्रॉफिट विल बी नील. So what will be the earning before interest and tax, where your profit after taking into considering all the costs, which is interest cost, dividend cost, your profit will be nil. So the formula is that at financial break-even point, EBIT should be equal to interest plus PD, interest plus preference dividend, 1 minus divided by 1 minus T. Why this is divided by 1 minus T? In a way, for interest you get tax benefit, but for preference dividend this tax benefit is not given. So EBIT should be equal to 10,000 plus 9,000 divided by 1 minus 10%. So that will be 10,000 plus 10,000, which makes it to 20,000. So let us solve it. Say EBIT is, we have already at 20,000, interest is given at 10,000. So EBIT will be 10,000 and tax, EBIT will be 10,000 and tax is 10%. So that is 1,000. So earning after tax will be 9,000. Preference dividend is already given as 9,000. So profit will be nil in the instant case. So the correct answer in the given question will be 20,000. That is option number B. Now question number 7 says, what will be the financial leverage based on data given in question number 6. So financial leverage, what is the formula for financial leverage? Financial leverage होता है earning before interest and tax divide by earning before tax minus preference dividend whole divided by 1 minus tax rate. So question number 6 में हमने देखा था कि earning before interest and tax, then minus interest minus preference dividend 1 minus T. So we calculated EBIT in that way that it becomes equal to interest plus preference dividend whole divided by 1 minus T. So in the instant case, we know the denominator will be 0 because EBIT will always be equal to interest or preference dividend. So the denominator will be 0, which means 20,000 divided by 0, the answer will always be infinity. So conclusion is, at financial leverage, financial break even point will be infinite, or that you also say it undefined. So just to solve it, you can solve it and find out on your own कि फाइनेंशियल लिवरेज इनफाइनाइट होगा या यहाँ पे जीरो नहीं होगा. डोंट गेट इट कंफ्यूज विद जीरो, क्योंकि अभी किसी भी संख्या में जीरो का भाग देंगे तो आंसर विल बी इनफाइनाइट और अनडिफाइंड ओनली. यहाँ पे जीरो से कंफ्यूज नहीं होना है हमको. विल सेलेक्ट ऑप्शन नंबर ए इन द इंस्टेंट केस or instant question. Question number 8 says, if the cost of equity is 15%, tax rate is 22%, floating rate is 5%, then what will be the cost of retained earning? तो cost of retained earning क्या होता है? Cost of retained earning means जो profit बचता है after paying all the expenses, after paying preference dividend, after paying taxes, जो भी प्रॉफिट बचता है विच गेट्स एडेड टू इक्विटी, जो बैलेंस शीट में इक्विटी में ऐड होता है थ्रू रिजर्व एंड सरप्लस, दैट इज द प्रॉफिट फॉर द करंट ईयर, वो होता है रिटर्न अर्निंग. तो कॉस्ट ऑफ रिटर्न अर्निंग क्या है? तो कॉस्ट ऑफ रिटर्न अर्निंग इज इक्वलेंट टू कॉस्ट ऑफ इक्विटी, बट ऐसा नहीं होता, क्योंकि कॉस्ट ऑफ रिटर्न अर्निंग पे आपको टैक्स बेनिफिट भी मिलता है. बिकॉज जब आप P&L बनाते हैं तो जो प्रॉफिट बनेगा उस पर आप टैक्स भी कैलकुलेट करके फिर जो नेट प्रॉफिट आफ्टर टैक्स है दैट गेट्स कैरिड टू बैलेंस शीट. तो रिटर्न अर्निंग में फर्स्ट प्रॉफिट बेनिफिट ये है कि यहाँ पे आपको टैक्स बेनिफिट मिलेगा. सेकंड, जो इक्विटी आप इशू करते हैं, इक्विटी जब आप इशू करेंगे तो उसमें फ्लोटेशन कॉस्ट ये सब लगता है, वो रिटर्न अर्निंग में नहीं है, बिकॉज दैट इज जनरल सिंपली generated by the company. So the formula for cost of return earning will be cost of equity into tax benefit, that is 1 minus T, into flotation cost benefit, that is 1 minus FC. So in the instant case, the cost of return earning will be 15% into 1 minus 22%, that is 78%, then into 1 minus 5%, that is 95%. So the answer will be 11.12, that is option number D. Here you need to note it down that cost of debenture is less than cost of preference share, which is further less than cost of retained earning, which is further less than cost of equity. मीन्स जो सबसे चीपर है दैट वो डेप्ट है, उसके बाद प्रेफरेंस आता है, उसके बाद रिटेन अर्निंग आता है, और सबसे लास्ट में इक्विटी इज द डियरेस्ट फॉर्म. सबसे महंगा जो सोर्स ऑफ कैपिटल है वो है कॉस्ट ऑफ इक्विटी. In theory, how will you explain cost of retained earning? The cost of retained earning is an opportunity cost as the entity foregoes return by flowing it back in the business instead of alternate uses. Say for example, आपने 10,000 रुपये कमाए और 10,000 रुपये आपने बिजनेस में लगा दिए. अब आपका बिजनेस में मार्जिन 10-11% का रहता है, बट एट द सेम टाइम अगर आप उसी प्रॉफिट को चाहो तो म्यूचुअल फंड और किसी और इन्वेस्टमेंट में कर सकते हो. तो यू आर फॉरगोइंग दैट पर्टिकुलर बेनिफिट just by infusing that capital back in your system. So in alternative theoretical way you can also explain what is the actual cost of retained earning and why it is so important. So let's go to question number 9. As per pecking order theory, which type of capital is used first by manager? Pecking order theory क्या है? पैकिंग ऑर्डर थ्योरी में सबसे इम्पोर्टेंट ये है कि देयर इज ए इंफॉर्मेशन एसिमेट्री. दैट्स वाई जो मैनेजर्स हैं दे आर नॉट एबल टू डिराइव दैट विच टाइप ऑफ कैपिटल इज द चीपेस्ट. तो उस इंफॉर्मेशन की इनसफिशिएंसी के कारण और एसिमेट्री के कारण वो सबसे पहले रिटेन अर्निंग को यूज़ में करते हैं. सो इन द गिवन क्वेश्चन द आंसर विल बी रिटेन्ड अर्निंग्स. Because of information asymmetry, generally what you will see in the companies, managers they end up using the retained earning first, then they will use cost of debt, and at the last they will issue equity because they know the debt is cheaper than equity. That information is available with them, so they know it's better to issue debt instead of equity because cost of debt is less than cost of equity. But the problem is they don't know what is their cost of retained earning. So because of this information asymmetry, they end up using cost of retained earning, which is more expensive as compared to cost of debt. So this is the issue and this is the practical scenario in the companies. Generally जो retained earning है उसको तो यूज़ किया जाता है, but again going by this particular pecking order theory, it's better to issue debt so as to improve your profitabilities for the equity shareholders. Now let's go to question number 10. Following the DuPont equation, debt issued to retire equity will impact ROE in following ways. Options are increase ROE, return on equity, or decrease ROE, or ROE will remain unaffected, or any of the above. तो सबसे पहले हम देखेंगे what is DuPont chart. DuPont chart is an equation which shows how return on equity is derived. So this is the formula for return on equity as per DuPont chart. उसने 3 कंपोनेंट में डिवाइड किया है रिटर्न ऑन इक्विटी को. तो रिटर्न ऑन इक्विटी इज नथिंग बट नेट इनकम डिवाइड बाय इक्विटी. वी नो द नेट इनकम इज ऑलरेडी देयर and equity is already there, but in between revenue and total assets, they have been correlated in a way. So we come to know that which component is impacted your return on equity positively or negatively. So it is net income divided revenue into revenue divided by total asset into total asset divided by. So if you cut revenue will be get adjusted, asset will be adjusted, so remaining figure will be net income divided by equity. But through this analysis you will come to know that what actually is affecting your return on equity. So if you retire your equity and issue it through debt, so your equity will come down. Here your equity will come down, your net profit will remain intact, so your denominator will reduce. What will be the impact? Impact will your return on equity will improve. So if you retire equity and issue debt to fill the gap, your return on equity will improve. So those were 10 questions till now आई हैव प्रिपेयर्ड फॉर फाइनेंशियल मैनेजमेंट. आगे भी मैं कुछ बहुत जो इम्पोर्टेंट क्वेश्चंस हैं जो एग्ज़ाम में आए हुए हैं या उनका रेफरेंस लेके क्वेश्चंस फ्रेम करूँगा, so that all the aspirants, though irrespective of their degrees, if they are preparing for an government exams which is related to finance or accounts related field, it will be of immense help to them. Till then, thanks.